Hello guys, it's Castaway Trader and welcome back to my YouTube channel. Today the video is called How to Get Confident in Your Trading, and we will be talking about my trades and about a big account in S&P 500. Before we start, please read that important disclaimer. Okay, this is how my website looks like. On that website you can see market analysis posted regularly. This is a free section and this is a premium paid section for my subscribers, and here I have additional information about two of my video courses. First, we will be talking about the latest coverage I provided my subscribers about the US stock indices in June and July. I just want to remind you that I have a monthly plan which is called Updates on the US stock indices, and it includes short-term and long-term forecasts for futures, ES and Q and RDI, and I post at least 3 updates a day starting from 8:30 a.m. until 10:30 p.m. Eastern Time, and as an additional bonus comes forecast for tweaks. This is ETN linked to volatility VIX, and each of my chart would have potential reversal zones marked with green and red target boxes and detailed explanations of potential scenarios. Not only it helps you to trade better, but it helps you to learn faster if you decide to get proficient in harmonic Elliott waves. And even if you think it's very difficult to learn it for yourself, you will be learning just by following me. Okay, now I'm gonna show you several examples of the counts I sent to my subscribers over the previous months. This is Thursday, June 10th, and look at that red target box, and I'm writing to my subscribers that we may be in the final squiggles of that move up. And the very next day, look at that move down, then retest again of the very same red box and another drop lower. Thursday, June 16th, here I just found a great long setup, ABC down, the green target box to go long, and the next red target box as a target for the potential rally. And boom, June 20th, what a great execution. Look, it just dipped into the green target box and then it just went up without any stop, getting right into my red target box. Wednesday, June 26th, this is the red target box. 1, 2, 3, 4, 5 attempts to break out, and all of them failed. This is the power of my red and green target boxes. Monday, July 10th, and here I'm showing 2 potential scenarios. And even under the bearish scenario, I was expecting a move higher, and we got that move higher, and here again I'm providing my subscribers with another red target box, and look what happens next. This is exactly where it topped. It meandered here for some time and then dropped back down. This is July 19th, last Friday, and I explained to my subscribers that we should keep a bearish bias. I expect another push lower in wave C of B, and this is the green target box, and you know that we got a sell-off by the end of the day on Friday, so I nailed that again. Now you can ask me how I could predict those market turns. Do I use some magic or holy grail which you were looking for so long? No, I do not. What I do, I use harmonic Elliott wave theory, and I have 2 video courses in detail explaining everything I do, and I believe that I did a great job explaining everything. I did not hide anything from you. So if you take those courses, if you study them carefully, if you keep practicing them, you will be as good as me or even better. I hope so. This is the second course I've just released, and this is a professional course which focuses more on trading. It builds upon the first one. It has much more practical approach. It talks a lot about winning rate, about setting stops, about setting targets, about exiting trades. And the first course talks about the foundation of the harmonic Elliott wave theory. So I strongly recommend you to take both courses. To take first the first one, predict the market with harmonic Elliott wave analysis, and then to start learning how to trade waves. And as you can see, both courses are hosted on udemy.com. This is the largest educational platform in the United States with over 20 million students. And for all the courses on the subject of Elliott wave theory, my 2 courses are ranked very high. So this is currently a bestseller. The first course is a bestseller, and the second course now has even higher ratings than the first one, and Udemy ranked it as hot in you, and the first course is ranked as bestseller. For first 20 people, I offer coupon YouTube20 to save 20% on both courses. I will provide links in the description of this video, and you can click a link and you will get to a discounted price, discounted by 20%. Please note that offer is valid until September 1st, and number of coupons is limited to 20. I'm going to talk about long-term count in S&P, because so many people keep asking me about my long-term view on S&P. But before I start, I want to make a promise to you. At the end of this video, I will explain how you can get free access to my coverage of US stock indices and volatility for 90 days. So if you stay with me, you will get a great offer at the end of this video. So this is the 5-wave up fractal, which is the backbone of any rally we have in the market. And this is exactly what we have been tracking in S&P starting off the low of 2009. Any 5-wave up fractal starts from ABC up of a major low followed by ABC down. This is ABC up, ABC down, and this is S&P 500 starting off the major low in 2009, ABC up and ABC down, wave 1 up, wave 2 down. Next, once the wave 1 up, 2 down are completed, that becomes our major low, the starting point of wave 3. Wave 3 is subdivided into A, B, and C. This is the strongest part of the 5-wave fractal, in this case 5-wave up fractal. And we should look at S&P and try to identify the first part of the wave 3, it's subwave A. And this is it. This is May 2011, top of wave 1, October 2011, bottom of wave 2, and this is the first part of the rally which topped in May 2015. This is wave A of 3, followed by ABC down, B of 3. So we got that rally and we got that pullback. Of that low, we should get the strongest part of the rally in wave C of 3. Many people call it the heart of the rally because price goes up in accelerated way. And coming back to S&P 500 daily chart from 2014 until 2019, we got that second segment of the rally, second leg of the rally in wave C of 3, and it topped in September 2018. Once that ABC of wave 3 tops out, we should look for a pullback. But the problem for many traders that at this point they get euphoric. The rally seems to continue forever. What drives the market to the top of wave C of 3 is pure greed. This is when newbie traders and many experienced traders lose touch with reality. They only wish they could have bought more, and those who shorted the market would lick their wounds. They would be made selling those shorts, covering those shorts somewhere close to the top. A corrective wave 4 arrives when majority of bears has already given up and bailed out of their shorts somewhere here close to the top. And then when nobody expects the decline comes. And this is what we got of the September top in 2018. You may remember that very sharp drop structured as A down, B up, and C down, a classic formation for wave 4 down. And it bottomed in December 2018. Off that bottom of wave 4, we should have wave A of 5, which quickly normally brings price back up to the previous top made by wave C of 3. And again, this is exactly what we got. We got a very strong rally which started in December 2018 and which has not yet completed yet. We have successfully retested the previous low. And that pullback could have been wave B of 5, but in my opinion it was too small, so my primary scenario that we are still in that wave A of 5. It can get a little bit higher than the top of wave 3 here, but it can never make a sustainable breakout. Inevitably, it will come back down under that resistance and it will keep going down in wave B of 5. This is what I'm talking about. Once that wave 4 down finds its bottom, and it happened in December 2018, we should get the very final push higher. We should get A up, B down, and C up, and where C up should make a new all-time high if we talk about S&P 500. And the starting point here is the low made in 2009. And September 18, December 18, sorry for the typo, and this is the top which is coming for that rally started in December 18, and that may happen somewhere in July, August 2019, when we are supposed to have a bigger pullback in wave B of 5, but that would not be the top of that whole formation. That would be just a temporary pullback which should give birth to the very final strong rally, which should make all-time high in wave C of 5. So my expectation is that wave A of 5 may stretch a bit higher, and then we should get a bigger corrective wave, parenthesis B down. Now you can ask me, so you still use words possibly, maybe, how you can get confident in your analysis. And here I want to tell you a couple of words about microcounting. Microcounting is a process of counting subwaves, smaller waves that compose bigger waves of a higher degree. So we've been talking about a large fractal on a daily time frame, but if we want to get more clarity, if we want to get more precise, we will get lower to a lower time frame, like 120 minutes, 45 minutes, or even 15 minutes charts. And this is how you can see subdivision of waves. That 5 waves up has several impulsive waves: A of 1, C of 1, A of 3, C of 3, A of 5, and C of 5. But each of those waves is itself subdivided into 5 waves of smaller degree. This is how it looks like. You see 5 small waves here, 5 small waves here, 5 small waves here. And the rule of thumb is that an impulsive wave would keep going higher or would keep going lower in direction of the main trend as long as its structure is incomplete. And we call a structure complete when we have a full 5-wave fractal completed. For example, wave A of 5, which started in December 2018, has to be composed of 5 microwaves. And as long as we do not have a completed structure, that rally can keep going higher. To conclude wave A of 5 completed and to predict start of a corrective counter trend move in wave B down, we should count 5 microwaves inside that rally. And this is a micro count. You see here I'm dropping down from a daily chart to 3-hour chart, covering the period from December 18 until July 19, and I'm trying to get a full completed 5-wave fractal, and we still do not have all 5 waves. You can see here ABC of 1, ABC of 2, A of 3, B of 3, C of 3, then a pullback A is structured as ABC down in wave 4, and of that low we should get the final ABC up, and as you can see we have just completed wave A of 5 of that lower degree, and we should keep going lower in subwave C of that B down before the very final push higher. Again, that push higher would complete that 5-wave up fractal, which is the structure of the rally started in December 2018. And once those 5 waves are completed and that wave A of 5 is completed, we will come back to the bigger fractal, 5-wave up fractal, on a daily time frame that started in 2009, and we will start looking for a bigger corrective wave B, which can retrace a substantial part of that rally that lasted for more than 6 months already. Now, remember, I promised you a great offer. So the offer is, if you subscribe to both courses I've been talking about, my both video courses, you're gonna get 3 months of free access to updates on the US indices. You will be getting my reports 6 days a week from 8:30 a.m. until 10 p.m. or sometimes even 10:30 p.m. Eastern Time. And this offer is valid until August 1st, 2019. And this offer is valid for new subscriptions for video courses made starting July 21st, 2019. Thank you for your time. Keep counting waves, make money, and please like this video, and I would really appreciate it, and I would record more videos to keep you entertained.